The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. Larry he's around, but his voice is just still froggy, and as such, I'm sitting in for him. So this is the Commodities Hour. Love to take your calls about the commodities, or perhaps even the stocks that are related to the commodities. And let's just run through the numbers as I see them right now. And this is very interesting because I'll just run through the cash contracts in DU. The Dow at this particular point had been down quite sharply. Then it came back. Why am I missing it? INDU. There it is. Made a low today of 13,215. Rallied back to about -8 and then pulled back in the last 20, 30 minutes. So it's testing the lows. Now, what's really important for me is that the Dow made a new recovery high above the 13,297 level on the 2nd of April, went to 13,338, and is now pulling back. I say pulling back because at this particular point, I use, Larry does not use moving averages or the technical tools that I use. So in keeping with what I do in my Tiger Technicians Hour, Monday, Wednesday, Friday, 11 o'clock until noon Eastern Time, and my opening call, which is my daily, very intensive look at the markets, my daily subscriber newsletter, and I go through all the different indexes, and I go through the E-minis, the S&P, I go through just a whole chunk of things, as well as the stocks or whatever issues it is that we are long or short. But what's really important at this particular point is that I use a technical indicator called the slow stochastic. Now, the slow stochastic has parameters of 14, 3, 3, 1, and 20% and 80%. The rule that you'll always read is that when the slow stochastic is above 80%, the terminology that is used is that it's overbought. I completely disagree. That's what you want to see. If you look at Apple, look at any of those stocks, the ones that ran up as they were running up to their highs, all-time highs especially, they were in the 85, 95 area. When they go under 80%, they are vulnerable. So you want it to be over 80%. Under 20% means that you are not oversold. You are in sell territory until you can come back over 20% again. So I just wanted to clarify that. The MACD, the moving average convergence divergence, and in this particular case, what I use are 12, 26, and that makes a differential, a moving average differential of 9. So when you're looking at my charts, if you're looking at Tiger TV, let me just expand this a little bit so you can see exactly what I'm talking about. The slow stochastic right here, the red and yellow lines. The red is the slow-moving average, and the yellow is the fast-moving average. And you see the V-shaped formation here. That's what I call the Groucho Marx eyebrows formation. There was a great example that I saw today. Perfect. Oh, Caterpillar, look at this. See, I like chart pattern. Yeah, this is what Larry and I talk about all the time. Chart patterns repeat over and over and over. Look, there it is. There's that V-shape. Groucho Marx eyebrows, there's the schnoz, there are the eyebrows, and then the price pulls back usually to the 9-period exponential moving average. That's what Caterpillar's done. This is the monthly chart. So when I talk about a pattern that I call the dreaded H, let me just draw this in here. And actually it's appropriate to be looking at Caterpillar. Now, after all, this is a commodities-related stock in many ways. And look at, this is the pattern that I talk about, the dreaded H. Why is it a dreaded H? Because when it takes out the left side low bar of this arch formation, lowercase h, it can go lower, and it can keep repeating the same pattern. And this is exactly what Caterpillar is doing right now. Hasn't tested the most recent lowercase, the left side low bar at 99.80, but the low yesterday was 100.65. So that's pattern, right? Pattern recognition. So let me go on. We're talking about the Dow, and the reason why I said consolidation is that the MACD was still very strong. And as long as that MACD is there, it's like when I talk about the volatility index, the VIX, I talk about buying pressure and selling pressure. That's all it really is. It's buying pressure, selling pressure. So to me, the slow stochastic shows you the buying pressure. In this particular instance, the Dow is pulling back. The day's not finished. Anything can happen. But look what happened. It pulled back. It's way above the 13,180 level of the slow of the 9-period exponential moving average. That's that white line. And the unbalanced volume, A, B, C, hasn't made a D yet and has made a little M-shaped pattern that's pulling back. So that says, hey, you've got to be a little bit careful here. And if I look at the 120-minute chart, we made a peak E in the 120-minute chart. Oh, let me just explain. In the Chapman wave, what we look for are 4 higher peaks. Peak A, peak B, peak C, peak D. This is where my notation completely is completely different to when Tom or Larry or Steve talk about the AB equals CD. This is completely different. This is peak A. Peak B, 1 penny above peak A, you go to peak B. 1 penny above peak B, you go to leg C until it makes a peak. 1 penny above C, you go to leg D until it makes a peak, meaning a lower high bar. So normally 4 is where you've got to be very careful. The peak D. And this is exactly what happened in the 120-minute chart. It pulled back to trough A, B, C, D, trough D, and now it goes back to A, B, C, D, pulls back and has one spike. This is what I call a right arm extension, and it goes. Why? Because the technicals weren't quite as strong as they were before, and this is where you can expect some kind of a failure, which is why I said to subscribers today, got to be a little bit careful here. There's one issue with trying to get in on a pullback because it seems to be perfect in that it's a dividend stock. It is one of the laggards in the Dow. It just has all the criteria, and we will put in a fairly tight stop because we already have a core position. So that's the way I like to look at these things. Now, that says that the Dow could very well test the 13,192 low of yesterday if it's still weak. Then, of course, you've got your jobs report. Is that jobs? I think it's called the jobs report tomorrow, and that's going to be it's going to be a big issue. Why? Because a news event cannot change a trend. But if a trend like this has made a peak D top, and the stochastic starts to break under 80% because the Dow is breaking under 13,150, 13,000 key support, I have to say, hey, trend for the short term has changed. We're coming down. Got to watch this oval pattern because it made a leg E in the weekly chart. So I just wanted to go through that. Now let's get to the nitty-gritties. The nitty-gritties, I had a question in the den. Could I look at lumber, LB? I'm going to go to, just for the moment, the wood. Wait. First of all, the question was, how about lumber, Basil? Planning a small position. Well, I'm going to go to the LBK. No, let me go to LBM. LBM. Is that the lumber? I never remember. Okay. LB. I'm just going to go to K for the moment because I think that, yeah, I've notated the K, and that's May. I think May is still, it's functioning right now. Probably people will be looking out. But I had spoken about this a little while ago, and I think I was doing Larry's show when he was away. I'll try to get it during the next break. I'm going to pull up a chart that shows it shows wood, WOOD, and it shows the chart pattern. I'm going to show it here as well, but I can't remember why it was together with, the home builders. I think I had it together with the home builders to show that there was some kind of a correlation. What I said a couple of weeks ago, I said, I believe we're starting to get a buy signal in the lumber contract. Well, the lumber contract has gone to that requisite peak B today. If there's no new high, it says that the stochastic's at 93% and the MACD is still expanding. That is really good. Let me just for the moment look to see if there's an N contract, just because I want to be as... Yeah, the N, I've already done it. The N contract is already made. N is July has already made a peak D. It's holding the 200 period. Now, this is the reason why I got into moving averages. Look how important this moving average was. It was complete resistance in the rally going to the 12th of December. It was a complete resistance all the way through, even though price went above it. It had been below it for so long. I'm going to contract this contract. I'm going to shorten the duration. So now what I've done is I've squeezed it close, and you can see that this, although there aren't many, it's got the contract, but it hasn't got very much volume at all. You can see that that was a repellent line. Look, all of a sudden, it's trying to turn, and this is very important, it's trying to turn into some kind of a support level. Now, that corresponds because you will see, sometimes you'll see a delay, sometimes you'll see an anticipation of a move in the core, which would be probably in the housing sector, in construction. So I'm just guessing. I don't trade this contract. I'm just only looking at a chart pattern. So the question is, I'm thinking of starting a position, and I would say this, that you could start a small position at 286.40 right now, even though it's in peak D, and at peak D you can expect some kind of a consolidation in time, maybe even in price. Look, you had one right there when you made the peak D on the 13th of February at 290. This is the LBN 12 Random Length Lumber, July 2012. And I know about random lengths because I know that when I did quite a lot of work on my house, I did most of the contracting, and I went and got the lumber, and they're all different sizes. So now what we're looking at is, this is very important to me. I am going to grab the 120-minute chart, and you can see it's really a rectangle formation. And that says, in the rectangle formation, it's really important for lumber to decisively break. I mean decisive. It's got to close above 288.90. That was the high at 8 p.m. on the 26th of April. It's got to close above that. As soon as it does that, I can start looking at the weekly chart. And the weekly chart says, there's that pattern that I look at. It's called the soft W pattern. It's like two U-shaped, almost like a heart upside down. Now what we want to see is, at some point in the next 2 weeks, I really would prefer for it to be by Wednesday or Thursday of next week, to see lumber spike above 295.70. To me, that would be really important. So here we are. We're looking at lumber. I like it. Where would I put a stop in? I don't know how it works. I don't know how much it is a contract or anything like that. Just looking at the price itself, 9-period exponential moving average on the weeklies at 278. That's 8 points away. I suspect that's a lot of money. But so let's do the short term. Yeah, 280, 283 to 282 is key support. Someone's listening to us right now because it's spiking as we talk. So that's lumber, and I'm going to try and pick up the wood contract or whatever it is that I have, and we will go to Mike in New York straight after this break. Basil Chapman sitting in for Larry Pesavento. I'll be right back at 877-927-6648. Hey, overseas call 727-445-1044. Love to hear from you.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. Dow's down 35, S&P's down 6, the comp index is, let me just grab this here. The comp index is down 26 at 3,032. That's quite deep. We've got, let me just go through gold. You know, I've just not been interested in gold or silver on the long side at all. To me, it's just the chart pattern says weakness and gold is down. The GLD is down 184 at 158.76. We're going to talk about this in a moment. We've got a caller online. We'll talk about it. High-grade copper is down 3.74, down 0.04, and we've got the silver's down 50 cents at 30.14. Bonds are up only 2 seconds. You know, this is such a fascinating market. But I had just while I was on break, had a question from Nancy in the den about Apple. This is a commodities hours, but I'll talk about Apple because it obviously is a very important thing. Apple made a round number high of 644.00 on the 10th of April, plunged down to 555, filled the gap at 555, round number, spiked up to 618, round number. I've been discussing this for some time. I love to look at round numbers at highs or lows. They are really important in my work if that's going to a potential peak or a trough, and I got a slew of them all over the show that I've been looking at over the last couple of days. And what's very important for Apple, it's made a peak F top in the weekly. If it goes to 6 higher peaks A, B, C, D, and then E. The song goes, chap wave song goes to, wave goes to A and then to B, even the anticipated C and D. That's when it flashes a cautionary light, but all you got to do is make your stops real tight. Suddenly it goes to E and F. That's what Apple did. That's a bell rings so loud it can make you deaf. That's when it hits that round number. So what you're going to do, which way to go? You sell at the high and you buy at the low. Easy song to sing, not always easy to actually participate in and to trade. And so the peak D is possible in the weekly. Now, when you look at the technicals in the monthly chart, that's really strong. So now let's go to our first caller, and we're going to talk about this because I want to show how the MACD technicals are so important until they cross negative, and this will lead me into it. We've got Mike in New York. Hi, Mike. How are you?
Good. How are you?
Very well, thank you.
Two questions.
Fire
First
away.
question is how low can SLW go? And
Well, that's an easy. Wait, Mike. That's an easy one to answer. It can go to 0. Next question.
Okay. Next question is, can the direction of gold, price of gold, tell us where the Dow is headed?
Another very good question. Okay, Silver Wheaton, which is obviously a coffee company. Nah, it's a silver company. And what we're looking at is it made that, you remember the peak F top I was just talking about? Well, this went from the low of $2.56 in October of 2008. It walked the 9, folks, look how beautiful that 9-period moving average is, exponential moving average. It just walked that line until it ran to that peak E in December of 2010 at 42.34, pulls back where? Right to the 9-period moving average. Look at the fast moving average of the MACD. Look at that beautiful indicator. Look how the stochastic was above 80%. But at that particular point, when it went higher to peak F, to the 47.60 high in April of 2011, look at that. The unbalanced volume did a V-shaped reversal, and the slow stochastic made that it was a complete right shoulder failure. It just didn't even get close to the previous high. It was somewhere around 83%. Silver wheat comes down, and what I'm anticipating is that if silver wheat, I think it's going to, but I'm saying if silver wheat takes that 27.96, that 27.96 on the monthly was last month. That also coincides with the low of close to the low of 26.85, the low of December of last year. If in the weekly chart, if it takes that out, my anticipation is that when silver wheaton gets to a left side, right side price time match, let me just give you this. Let me just draw it in here. I have to go to. It's a little far, but I'm going to do it. In this particular methodology that I use, what you can see, actually, it goes way too far out. It goes all the way to June. I don't think it's going to take until June. So I would have to find a shorter one. I could go to that one there because it's a doji candle. All right, that's the one I'm going to. I'm looking at the low of 25.84 back in October. Whoa, we've got a break coming up. I'm going to finish this, and I'm also going to pick up a chart in my other work that'll kind of correspond with this. Hold on, Mike. We'll be right back. It's a good question, and I hope I can answer it succinctly.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing, and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations options, including price targets and price stops. As recently as March 21st, Market Insight subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, your ultimate trading mastery system, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and Forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. Now my service is the Opening Call. You can go to the front page, check it out. You'll see that I do the detailed work that I discuss here with the different methodologies that I've developed over the years. All of that is every single day I go through this in terms of the chart patterns, because you either go in a straight line up, straight line down, an arch formation, or a cup formation. A V-shaped formation or an inverted V. Those are basically the 5 or 6 patterns that you're looking at. Now, let's just go back. We've got Mike online. And, Mike, this is what I'm looking at. Are you in the SLW position at all?
Yeah, I'm already short.
You're already short. Okay, then this is easy. Now I'm very comfortable with the chart pattern that I did, because the 120-minute chart gave me the clues that I was looking for. SLV is silver, wheat, and core. It's obviously a silver company, trading at $28.99, down 95 cents. I have a left side, right side arch formation. Whoops, that's not a D, that's an E. Arch formation. And that arch formation says that there's a really good chance, based on the MACD and the stochastic, that it's going to pull back, and it's going to pull back and on the 7th of May, it should try to hit, by the 7th of May, it should at, I can tell you the time even, at 11:30 in the morning, it should have tried to test the 27.96 low of the 23rd of April. If this particular pattern corresponds to the left side, right side price time match, which is something that I teach, and if also the inside wedge, it's called the Chapman Wave inside wedge formation, is going to work with the MACD and stochastic pulling back, that's kind of what I'd be looking at. So now that would be the first major support, but I'm looking at 25.21 as also a price time match in the weekly chart that says 25.21 is where silver wheaton should have its first decent bounce. If that bounce cannot get above 31.41, it'll be a little low at that point because it's based on the 9-period exponential moving average. Be careful, because now what you're doing is you're making an arch formation that becomes an M formation. And that, look at this, it goes like that, makes a larger one, which says be careful, because the weight of this avalanche coming down could be so great that it cannot put the brakes on. It's not modern disc brakes, it's the old-fashioned brakes, and it just won't stop it in time to stop at 25.84, and it'll go down to the 25.21. If it closes under 25.21 on a weekly basis, got to be really careful. So that's the answer. Now the question that you had is a very good question, because you said to me, what would the downside be? Well, I would not be surprised if I take into consideration all those mom and pop stores that say buy and sell gold opening up all around the country. That says to me we're looking at a good time out with gold and silver. If that's the case, then I would have a left side, right side price time indication that says if silver wheaton on a monthly basis closes decisively under 25.84, like in the 24.10 to 23 area, got to be really careful, because the next level of support will be this doji candle of, well, between 21.58 and 17. But I'm just going one step at a time. The 25.21 area would be the first target on a weekly basis, but that 120-minute chart says, what did I say, on the 7th? By the 7th, what's today? The 3rd. By the 7th, it should be testing the 27.96 area. So we'll see.
Excellent. Now the Dow versus gold.
Now let me just do this. I've got here Dow versus gold. I do have a chart, Dow versus gold. Let me just do this. This is the dollar versus the UUP, the SPY versus the UUP. Let me do this, and I tell you what I'm going to do. Let me tie it together in this way. If you're looking at this particular chart here, this big rectangle right here. It's got the UUP weekly. That is the Power Shares Dollar Bull, US Dollar Bull ETF. And it's had a miserable rally from the 20.87, 20.84 lows over the past, or just going back to April of last year. It couldn't even get to a D, and that's typical of the dollar. And I still believe that the Fed, or whoever is in control of the dollar, is keeping that dollar down. They want the dollar down because they want the U.S. internationals to do well. That's what I'm thinking. Now, what's important is if you look at the GLD contract, this 2-year up channel, 1, 2, 3, 4, 5. This is the 5th week that it's so close to breaking. And I think the GLD is going to break the 156.58. That's the Spider Gold Trust. And trades at 1/10 the price of gold. I think it's going to break 156.58. On a closing basis, is at 158.79. It's going to do that in the next week or so. And if at that point the dollar is not able to climb above, based on the UUP, which is at 21.93, it's only up 3 cents right now. If it cannot break 22.47, 22.53 to 22.58, as the gold is pulling back, this is going to be a really interesting period. Now, if you don't mind, so let me tie this together. The relationship, let me talk about relationships, because There are times when you absolutely want to look at relationships and times when you don't. To me, the relationship here is that money has been coming out of gold, out of the GLD, and is maybe just trying to find a place. So there's money out there. In the bond area, bonds are still holding really well, although they should be up quite a bit today. They're only up, they're down 5, and the TLT's down 5 seconds. I lost it. 0.07 at 117.18. That says to me it's still a safety. It's still looked on as bonds are still looked on as a safety factor. But at some point, if we start to see, even with the Fed trying its best to keep rates low, and I've had this mantra for 10 years or so, saying that one day we will emulate Japan and we'll have a 0% interest rate. This is the Japanization of our bond rates. It's kind of happening, but at some point, if the housing market really does come on strong, and I'm going to show some of the charts to that effect in a moment, I suspect that the dollar will remain kind of in a trading range, that bonds at some point could pull back and yields could go higher, but they don't have to go much higher, but a little bit higher. And what would happen is that the relationship of gold would not be a gold with the Dow, but we could see the Dow moving higher if the 13,600 area is taken out in the next 2-3 weeks. In May, instead of pulling back and breaking under 12,900. And I suspect that gold money will be coming out of there, and then eventually money will be coming out of the safety of bonds, whether or not bonds come down, but the money will come out and find its way somehow into the stock market. That's the way it's looking right now. So I can't tell you there's a direct relationship, but I can tell you the relationship of the gold and the dollar is not there anymore. There are periods of time where they do travel in the same direction. Most of the time, they do go in the opposite direction. So this is very unusual. So I hope that answers your question.
Yeah, great. Thank you. Very interesting.
Thank you very much for calling. I do appreciate it. Folks, Basil. Hello? Folks, Basil Chapman sitting in for Larry Pesavento. Now, let's look at the iShares, the S&P Global Timber and Forestry ETF, trading at 39.67. A lousy rally to peak D. The last one was spectacular. Went all the way to 52.97 February of 2011 from the 36.04 low. I took out the flash crash low. I just took it out. Now, look at this. You had, in the methodology that I use, am I hearing music? In the methodology that I use, look, from the 17.49 low in WOOD, that's the symbol, it went to a peak D, had what I call an instant restart. That's a technique that my CD introduced in the Chapman Wave methodology, only available at TFNN. This is where you're going to find all these techniques, except the moving averages, but I do talk about them in terms of the stochastic and the MACD. But I have a webinar based on the moving averages, a separate one. So you go to peak D, have an instant restart, you make another peak D going to 45.60, and that was in April, the week of April the 30th of 2010. Pulls back to 36.04, has another peak D, 4 peaks. Folks, you find me another technique that can so consistently over and over and over. Every single, I call it the Chapman wave, is the waveform that never sleeps. Why? Because every single peak gets graded, every single trough gets graded. Look what happened. It went to 52.97, comes down to trough E, goes to another peak D, where time and price is used up at 42.24. That says to me, look at underneath it, I've got the Philadelphia HGX. This is the housing sector index. Look how spectacular it's gone from 73.65 over the 132.53 high of April of 2010. It went to 132.38, and then, oh, no, wait a minute, 132, ha! That's interesting. It didn't go above that 132.53. It made a W formation, and now it's gone to 134. This week it went to 134.48. So now it's decisively above that, but we've got to see where the close is on Friday. Now that says, hey, what's going on with wood? Now I don't know the relationship. There must be some kind of relationship. I don't know it. So let's take that for the moment and say that WOD is holding very well. And if it does not close under 39.67, if it does not close in the next week under 38, but instead makes a new recovery high, let's say it's a 40.49, if it can go to 41.20, then it's back to the up mode, and I think it's going to retest the 42.24 area. So those are the levels that I'd watch. Now let's go back. When we're talking about the futures, there are patterns that I talk about all the time, like the rectangle formation. Look how long this rectangle formation, except for that one spike to 14.11 in the E-minis, the S&P June contract, you've been in a trading, it has been in a trading range between 14.03 and 13.89 for days and days, and even the pullback this morning didn't take out yesterday's low of 1389.25. Hey, day's young, anything can happen. But you see, you've got to identify chart patterns. Now, someone could say, oh, it's been moving all the time. Oh, absolutely. This is a 120-minute chart. If you were trading the 5-minute chart, like I sometimes do, or the 10-minute chart, or even the 1-minute chart, look at this. Here's the 10-minute chart. It went to peak E. It made a peak D. From the low of 1395.50 back on the 2nd of May, went to peak D on the 3rd at 1400, pulls back. Then this morning it held at low and went from 1396 all the way to peak D, pulled back, and then had a single spike. This I call a rogue wave. For those of you who are looking at Tiger TV, rogue wave. I actually call it a Chapman wave, rogue wave, because nobody knows what a rogue wave is. But the defining thing is that you've already made a peak, in this case a D at 1401.25, and then you pull back. Look, the stochastic, everything says you are absolutely right to be short, but then all of a sudden, there's this one rogue wave who didn't see the sign at the beach that said high tide at noon, and at 12:06, splash, everybody gets wet, and then the tide goes back. By the time you pick up your wet book and your sunglasses, you wipe them off, the tide is back to going out. The thing about the rogue wave is that bar must close towards the low, and the very next bar must go back to where you were just momentarily ago, and that's exactly there. 1398.50 was where you were on the low at 8:30 in the morning. You had the spike up to 1402.75, and then the very next bar after that, 1398.25, you made a lower low. That is a perfect example of a Chapman wave, rogue wave. So here we go. Now let me a couple of things that we wanted to do. Yes, here we go. I wanted to look at. Sometimes you can look at charts and you can say, what is happening? What is happening, because it's a very important index or a sector or commodity. And in this case, for me, high-grade copper is really important. And that's one of the reasons why I said, since I've made a peak D in the Dow, I've made a peak D in the SPY, but we didn't even get close to the previous high. IWM didn't even get close, made a peak D. The Qs didn't even get to peak D. It says that the tide might be changing. I've got to respect that. I've got to say, hey, we might be seeing more than just a short-term 2-3 day pullback. This could get deeper, and that's the reason why I wanted to look. I will look. JP Realtor and the Den wanted the bonds. I'm going to look at bonds in a moment. I just wanted to say that high-grade copper in the weekly chart is still good, but the daily chart is what makes me a little bit nervous, because if it pulls back, I'll finish copper and we'll go to bonds, because these are the important sectors. Basil Chapman, this is Larry Pesavento's Commodity Hour. I usually have my Tiger Technicians Hour Monday, Wednesday, Friday between 11 and 12. I'll be back.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. But you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
And let me just say that copper is something I'm watching real closely. If it breaks the most recent lows, that's not a good sign, because that's part of economic activity. If it breaks the recent highs, and I'll give those numbers in a minute. I've got a chart up right now. I don't want to change it, because when I move from chart to chart, I forget completely what I was looking at just moments ago. Whatever I'm doing at the now is what I'm looking at. So I've got the the May silver contract. Obviously, that's going to close out very soon, because most people are trading July, I suspect. But this chart is already notated. It shows that there's a left side, right side arch price time match. These are techniques that I teach in my Master Trader series, also in my different workshops. And this says that if this is going to work out, that by midnight on the 4th, that's tomorrow, the silver contract, this particular contract, should be testing 29.925. So there you are. That's just for the record. And now let's just go back to copper, HGM, and then I'm going to look at bonds. Now, the HGM contract, which is the June copper contract, has broken the 200-period exponential moving average. So that says I've lost all the support, although usually when you break a key support, you bounce back, which says about 3.75. It's a 3.73 right now. Copper needs to break about 3.75 or else it's in trouble. But if copper keeps going down, the next major support is around about $3.70. That's going to be very important. And I could do a left side price time match, but suffice to say that would come in around about Monday. Now, let's just do something else. The EUR-USD. I've been discussing on my show and both in Larry's show that I did the other day, said that the beautiful up channel, look how nicely this, you see these lines that I'm looking at? This up channel shows green. If it breaks above that, that's really important. This is what I call the inside track. In my CD Introducing the Chapman Wave Methodology, I talk about this inside track. The inside track says be careful because that's the area that's the repellent zone. Exactly what happened at PE at 1.329. Now the euro is gone, broken the support. Now it's the red line that's important. Now that red line, which is also the 200-period moving average of 1.318 to 1.3210, that's going to be strong resistance to follow. So I'm watching this closely because it made the peak D. It says, hey, the euro could keep coming back. Now what happened to the dollar? I'm a little behind in the dollar. The dollar ran up to where the exact resistance point that I was talking about yesterday. And if the dollar is able to break above 79.52, this is the cash index, that's going to be positive because the next level will be 79.65. So I'm watching that. Now, the other thing I was asked about, I'm going to go to the TLT just for the moment. The TLT is holding in this, remember the rectangle formation I was showing you in the futures? Look how long this can last as well. So the futures are holding very steady right here within this band that takes the TLT, the Lehman 20-year T-bond fund, to the 124 high and the 109 low. If in the next 2 weeks it breaks 109, closes under 109, that could usher in quite a sharp decline, closes that is, for the TLT. If on the other hand, the TLT by Monday afternoon is taking at 119.50 to 120.30, it says be careful because we're going back to the top part. Market's going to be vulnerable. So I hope that covers a chunk of what we were looking at and asked for. Now, as far as oil is concerned, the CLK, or is it M? I'm going to go to M. I think I've done M. I don't know if that's the one that's being traded. Or maybe CLK. Yeah, I prefer the CLM. CLM, I was asked in the den. Yeah, this is very interesting. Crude oil is coming down, and that pattern has failed to make the left side, right side time price. If crude oil takes out 101 support, it can go all the way down to 97. So thank you for being here, folks. Sitting in for Larry Pesavento. I'll be back tomorrow morning at 11. Check out my opening call, and don't forget this afternoon you've got Dave White and then Tom O'Brien. Great shows. I'll be back tomorrow.